Let me introduce our next speaker. John Davies is the executive chairman of Just Cashflow, and he's the chairman of the Association of Alternative Business Finance. Good afternoon, John. How are you?
Holly, I'm well. How are you?
Very good, thank you. First of all, we've been asking all of our speakers this afternoon what their advice to entrepreneurs and business leaders is during these challenging economic times. What advice would you give a fintech CEO right now?
Oh dear. Depends on where they are, of course, as some have alluded previously. Depends where you are in this sort of ecosystem right now. Some are doing well. I think Charlotte mentioned yesterday, those in AML are doing reasonably well, whereas others, of course, are really sort of struggling. And again, giving advice about adaptability, I think it was Darwin who said it's not the fastest or strongest, or in fact a unicorn that survive. It's actually those that are adaptable. And the challenge you have is that whereas that is great management speak, difficult depends upon where you are. So therefore, if you've built a really large business with a lot of employees doing a particular product or service, and suddenly there is no product or service you can deliver, where do you adapt to? Whereas if you are smaller, perhaps, or whether you are can differentiate, maybe so. So let's take the case of the non-bank lender right now, which Just Cashflow PLC is, and all of the other sort of non-bank lenders, or Libris, iWalker, and similar. Who do we lend to right now? Because there is no market. Our competition isn't the bank. Our competition isn't the challenger bank. Our competition is the government, because the government has literally rolled out all the funds. So why would any business want to talk to us? We would have been speaking to the last 8 years, because we have funded probably 1 in 3 of all businesses for the last 8 years. Suddenly, we're not part of that picture. So,
and Anne actually said the quote just a few minutes ago. She said the number one thing the SME customers are asking is, we need lending to save our businesses. What's it been like running a non-bank SME lender during this period?
Okay, well, let's go back for 1 second. It's not lending they want; it's cash that they want. There's a differentiation there. What right now they are being plied with loans to cover losses. As a lender, you wouldn't normally lend money to cover losses. You lend money to build a business, because you only need cash for 2 reasons: you're going backwards, or indeed you're going forwards. But right now, so I question really whether lending was the right thing to do for the SMEs. I believe that grants or similar or rebates would be the better way. Otherwise, you're just piling liability on all of these businesses. We're seeing quotes, I think, Anne beforehand. Let's be clear, money needs to get to these businesses 100%. However, we're not lending to them. We are just really giving it to them. There is no credit checks. There's no process. There's no checks whatsoever. We're just literally putting the money to the customer. Now, I have got loads of people who come to me saying, this is amazing. I've got a company with no assets, nothing else whatsoever. I've now got £50,000 sitting in my account. Okay, did they need £50,000, or did the business need £50,000? No, it didn't. Now, you also look at this one of the Guardian saying, since the launch of Bounce Back, 3.9 billion of consumer debt has been repaid. Must be a coincidence. But what's going to happen is the fact that if you're in business, you're going to take cheap money, no PGs, no liability whatsoever, reduce your own PGs and liabilities, because that's what you should do. That's what I will do. And therefore, do you want to carry on running that business in maybe Q3, Q4, when you can dump it and just start all over again? So again, the idea was that obviously these businesses needed support. C-bills was the wrong product, doing the wrong thing, but then the banks had to actually underwrite the product and actually had to take part of the risk. So because they had to take part of the risk, hardly any funds going out. Take away all the risk, happy days, let's just send the money out. So mindful of how that works. And as a non-bank lender, you will know, because we've spoken about this, is that a lot of most of the trade associations, there's Charlotte with Innovate Finance, Financial Leasing Association, ourselves as the ABF, IMLA, UK Finance, jointly proposed to HMT saying, why aren't we included? We have to give forbearance to all of these businesses, rightly so, because they can't afford to repay. So we need to provide some cushion for them, rightly so. However, because we're funded by warehouse lines or similar, then they aren't giving any forbearance. So suddenly we were in a squeeze position. So despite all of those trade associations then making representations saying, why aren't we involved in the distribution? Absolutely no conversation at all. Even to today, there is still a question of saying, not really sure whether you're part of a solution, despite being the ones who supported SMEs for the last 8-9 years.
So when you hear Anne a minute ago was pulling out the figures that Starling is lending out through these government schemes, it's the wrong solution. It's the wrong solution to the problem.
But we've got to be careful. I'm a great admirer of Starling Bank and what Anne's done there, Fact Life, and she's doing the right thing, and she's doing the right thing also by putting monies out to funding circle to get them distributed. We've got to get funds to those businesses. Absolutely 100%. Was it the right way to do it and the right thing to do? Big question mark.
It'll be interesting to see when the dust settles to have that discussion. You mentioned Funding Circle, and I thought the announcement this week was really interesting to see that kind of partnership between a fintech lender and a challenger bank. What do you think of that partnership in broad terms, and do you think we're going to see more of those in the future?
Okay, so again, let's be careful of the word partnership. So again, Starling has a huge amount of deposits, so therefore it's paying its depositors funds they've placed there. They need to get them to the market. One of those ways of getting into the market was to put it onto a platform like Funding Circle to get to the sector, and loads of other institutions have done the same, including the British Business Bank. So again, it's just a way of them getting funds out, which is otherwise costing them money sitting on their balance sheet. So again, back to the difference between a bank, whether it be a challenger bank or if you're a deposit licensed business, you take in retail funds, you pay not a lot of interest because as long as it's protected by the FCS system, there are guarantees, then it's quite safe for you. And that's the model, and therefore they're lending out. So a bank currently borrows from the Bank of England at 0.1% to lend back out. If you're a non-bank lender, that's not the case. You're lending funds you've had to borrow from other funds, whether that be venture capitalists or similar, which has been a terrific model to date because it's worked well for the SMEs. So over the last 8 to 10 years, SMEs have relied upon the non-banking sector to actually provide the funding for their growth, because the banks, whether challengers or otherwise, do not want to support businesses normally sub 2 years old. That's when they actually need the funds to grow their business.
What do you predict will happen? You've said that obviously traditional banks haven't wanted to support this SME sector. What do you think is going to happen after the crisis? Do you think traditional banks will return and move back away from the sector once again?
What do you think? Really, and obviously, like all these things here, they're being used as a distribution channel right now. Do they really want to support SMEs? Go back to CBILS, go back just 10 weeks ago. How much were they doing when they had to guarantee? No. Therefore, and again, we hear all the rhetoric, but the reality is, they've got all various restraints on what they do and how they do it. Again, back to businesses wanting to do things digitally, as Anne just said, the branches, but they're not set up to do that. Several other banks right now can't even take on new customers because they've got no way of actually digitally onboarding them for that particular. This system is completely antiquated. The challenge they've got is because they're such a large size, change is difficult. So what we proposed back a short while ago, I say we in terms of the various trade solutions to government, is say, well, look, why don't you let the traditional banks deal with the bigger businesses? So in the UK, there are 2 million trading limited companies. Of those 2 million, 257,000 actually employ more than 10 people. So that means 1.75 don't. And of that 1.75, or 950,000 employ no one at all. So therefore, if you think about dealing with those businesses, and those are the non-bank lenders have been servicing for the last sort of 8 or 9 years, would have been ideally placed to carry on trading with those businesses and also providing what they actually required. So, I was listening to one parliamentary sort of event about 6 weeks ago where the speaker said, great, good news, we're backing all these businesses. So literally go down the high street, speak to your relationship manager, and everything will be sorted out. That was George Osborne. I'm thinking, when was the last time he went down to the local high street and spoke to his relationship manager? Because as a PEP, yes, he would. However, if you're a normal business, sub 2 million turnover, when was the last time you ever spoke to a relationship manager? They don't exist. If you are with HSBC, sub 2 million, you're speaking to a call center literally 5 miles from where I'm sat right now.
Mm.
There's no relationship. So, and again, but I understand that because I understand why, because they have huge infrastructure costs and banks have a huge role to play in society and in commerce. Is it serving the smaller micro businesses? I'm not entirely sure it is.
Mm. Just a note to our audience, if you have any questions for John, make sure you drop them into the chat on the right-hand side and we will get to them. John, I want to ask you, with your chairman hat on for a moment, you've got a group of lenders in there. Can you tell us a bit about the technologies that you think are going to be the breakout financial technologies of this crisis? You mentioned call centers, and that's what led me to think, well, what do you think is going to be the breakout technologies, and who's benefiting because of them?
Right. So first of all, it's always the customer who's got to benefit. If you're doing anything other than where the customer benefits, you're doing the wrong thing. But also we have to accept that you don't wake up in the morning and decide you're going to use new tech. I'll take London Transport when they moved to contactless. You didn't think, oh gosh, what a great idea. I tell you what, I'll move to contactless. It was just the way you did things. And most of the things we do in technology is because it suddenly becomes the new norm. So similar to banking and similar, it becomes the new norm. Now, in terms of technology in call centers, omni-channel, so therefore making it easy for the customer to speak to you by video, voice, chat, whatever, you've got to make it easy for the customer to do that. In terms of servicing your customers, business customers, so again, without doubt, remote relationships, remote onboarding are all going to become major growth areas. And the major banks are going to have to actually start addressing that particular issue, because otherwise the branch, as Anne just said earlier, are getting less and less. People moving into post offices, then the post offices are closing, and it becomes difficult. So therefore, certainly anything when it makes the life easier for the customer is going to become an adopted technology. Whether they know the technology, again, we're on a video call today. I mean, wow, who'd have thought that 6-7 weeks ago? So many doing technology and video would actually work. But as you see, it works really well.
I like the point on the remote relationship management and how do we get to that.
Well,
just on,
I can just ask what we've got to be careful of is that there are different types of relationships. So therefore, you have a consumer relationship and a SME relationship. Now, if you're a consumer, your wants and needs tend to be less unless you have issues. As an SME, it's somewhat different. Who the heck do you go and speak to? I started my first business 41 years ago. Give me some idea of that. So 41 years ago, you actually went into your bank and sat with the bank manager who actually guided you what to do. Are you going to need an accountant? Go and talk to him. You're going to need this solicitor. Go and talk, and he would point you in all the right directions. And then you'd come in every 2 or 3 months and explain what your business was and what it was doing. And if you had an issue or a problem, you could pick up the phone to someone. Difficult in a digital world to do that. So therefore, again, as just cash flow, one of the big things we've always sought is to find a way of making sure that although the customer can, with ease, do anything he wants to do digitally, the minute he wants to speak to someone, he knows he can speak to one. And that does make a difference. So again, we've got to be careful we don't go down the super digital route and forget that actually relationships tend to be with human beings, not on an app.
You spoke a minute ago about some of the challenges facing the non-bank lender space. One of the questions we've been asking is about consolidation in fintech. But I guess speaking specifically about non-bank lending, do you anticipate a wave of consolidation to happen as lenders struggle in the environment? What do you think? How is this going to play out, do you think?
Okay, well, will be pessimistic unless there's a change of heart at government somewhere. I'm not entirely seeing how we lend to anybody in the next 6 months, because the bounce back is going to be there for the next until November. So therefore, you can only lend to people who didn't qualify, or it wasn't enough for them to qualify for CBILS, which is a kind of a narrow market. So the question is, can those businesses survive for another 6 months with no increase in margin, suffering bad debt, because they will get bad debt, fact of life. So therefore, how will they do that? So will we get amalgamation? Possibly. There will be some distressed organizations out there, whether it be lending or otherwise, they just will become distressed. If your business is purely built upon a unicorn valuation or similar, without the capital behind it necessarily, you're going to struggle, because if you need to come in for another round, you mentioned the Monzo, also you might be calling it round earlier, and I don't know whether that's true or not, but we saw that for the last couple of years where suddenly somebody had a sky high valuation, and then when they needed further funds, it dropped down. That is going to happen without doubt. I think Anne again just said that their own plans are starting to, whether the IPO was similar in the next 12 months has to be put back. Absolutely, as it is for our own ambitions, everything has stepped back a year and a half. All industries at some time or the other, and our sectors, and I've seen it over the 4 decades I've been in business, there will always be some sort of consolidation in some way or the other, because again, it is those that adapt best, those that can actually bring in us. But what I am seeing is, as a part of this COVID, is a huge change of mind shift in collaboration. And I don't mind calling out a number of people around that. So first of all, as trade associations, so UK Finance, IMLA, Finance Leasing Association, Innovate Finance, and ourselves, we run a call together, all of us this morning, working out what we do best for this particular industry. In terms of competitors, Christoph at Iwaka is not a member of the AABF. However, he and I have had several conversations about different approaches, as David left at Capital Tap, and also with Funding Circle as well. So certainly, what we are seeing is us realizing, what, trying to do this by yourself is mighty hard work. So the more you actually realize that by collaborating and trying to work with others is the right thing. Again, I applaud Starling for putting funds into Funding Circle. It shows that we're actually slightly more, not grown up, but slightly different in approach to the guys who actually have been there on the incumbents from many years ago, who seem to be determined to keep everything to themselves.
And
yeah, again, like in the morning, you walk down, and more people say hello to you in the street. So I just think that people realize, you know what? Actually, we don't all have to be cutthroat to succeed in business. Actually, talking to and working with others, makes a difference. Daniel on yesterday from I've forgotten his business.
Nutmeg.
Correct. Yes. We announced a partnership with them a couple of weeks ago. It's finding a way to help others get to the goal, which is to serve the customer ultimately better.
And obviously, the thing that in the last few weeks and months has brought you guys all together very strongly is in response to the government and what they're doing. And we've spoken a few times about the pros and cons of the government response. How, from the point of view of non-bank lenders, how would you rate the response overall? You've called out for changes. What more needs to change?
So again, criticizing from a distance, it's like being an armchair spectator. It's always easier if you're in the armchair watching. It's difficult to criticize, and in hindsight, you could have suggested different ways of doing things. And I think the immediate response in terms of the rates and similar and grants for certain sectors was the right thing to do. However, where I criticize slightly is that having now had a chance to think about it and having so much information provided to you, you're saying actually that this needs to be done differently, to completely ignore that advice, a question, big question. So therefore, again, we put it clearly to them, saying, there are so many people who have a part to play in the solution. I did a presentation to over 100 odd MPs and Lords 3 weeks ago, and I used the analogy of Dunkirk, where Dunkirk is this 80th anniversary in 2 weeks' time, where it was not the big boats, it was the small boats that made a difference as well. It was the small boats that pick them up at the beach to bring them to the big boats to take them back. And if you use the non-bank lenders as the smaller boats, they had a part to play, and we still have a part to play. But we have no fuel. In those days, the government provided the small boats with the fuel to get there. The fuel we need, which is funding and similar, is not coming forth right now.
Well, it'll be interesting to see over the weeks ahead. We've seen changes to the government schemes and a certain amount of listening. And we spoke to Charlotte yesterday about some of those issues. It'll be interesting to see if changes do start to come through. We've got a few questions from the audience that I wanna just pull some out. This is a good question. Jennifer Harrison has asked, "What's the first thing you check when you get to work in the morning?" I'd like to ask the question as well. What do you check in the morning, John? What's on your top of your list?
Just be clear, getting to work in the morning is when I open my eyelids. That's what it takes to run a business. It's different. It's a completely different mindset, and I've done umpteen different courses on this in terms of getting people to understand is that running a business, I think, is a complete and absolute mindset. Everything you think about, look at, do is all around business. So therefore, again, when you wake up in the morning, for one of my things is just making clear what I need to get through that day and what's being done that day, and what I need to prepare for that day. Now, so I'll say prepare for it the night before. You probably do that as well. But the one key thing is that for every business, you really, really need to focus on is always numbers. You must know your numbers. So therefore, as I quoted earlier, this is what we've loaned, etc. So you need to know where you are, what your figures are, and do that through the day as well. Because if you don't know where you are, time will have elapsed, and suddenly you can't change what you need to change. So therefore, certainly my focus every morning is where are we today.
George Huntley in the chat has asked, is John seeing delinquencies in his loan book as SMEs repay high-cost debt and consolidate their borrowings into CBILS? What do you think about that?
Okay, so delinquencies are different to people paying back. So therefore, will we see more delinquencies? Yes, 100% there. If you look at the figures coming out, the number of insolvencies are already increasing. I know for a fact that the insolvency service is now, instead of laying people off, it's now recruiting people and actually opening more offices. Never a good sign. So therefore, will we see delinquencies and others? Yes. Customers paying their funds back for now and reducing expensive debt for much cheaper debt. Get that totally. We're seeing very small numbers closing their accounts, which kind of suggests that they want to come back and borrow again later. But without doubt, in this kind of recession, and it is a major, major recession, there's going to be a lot of financial carnage where people cannot pay their commitments. Which, back to my earlier comment, I'm not sure applying people with a whole bunch of debt with the right strategy for the smaller businesses, because if they're not trading for 12 weeks and they have costs of 5,000-10,000 a month, suddenly they've got that, they are losses and nothing else. So therefore we've got to be very mindful that is going to create a huge issue going forward. And I think that again, I think there'll be a big outcry in terms of people trying to go after those debts. So will the courts have an empathetic view? Probably. Will there be people ambulance chasing, saying, "Oh, you loaned these people when you shouldn't have loaned it to them"? Because yes, and all those things as well. So we will see a lot of that without doubt. As just cash flow, slightly different to a lot of other SME lenders. We have always had a different view of who we lend to and how we lend to them. And again, because we have relationship managers, the old-fashioned word, who look after all of the accounts, we're actually seeing a large number of our businesses doing reasonably well, because we actually help and show them how to adapt, how to change, and how to do certain things as well.
Speaking of changing and adapting, just pulling up Jennifer's question again, how has Just Cashflow adapted? How have you adapted the business to, and I'm talking practically, to the new world that we're in now?
Sure. So again, it's, if you step back 3 months ago, had we ever dreamed of everybody working from home? No, not in a million years. So, but we did it. Our IT departments did what they had to do from a security point of view, so we could work from security, no data breaches, all worked really well. Does it suit everybody? No, but nevertheless, it's worked quite well. In terms of adaptability, the key message at all times is what pain or stress is your customer under, and how do you help the customer out of that? Because if you focus on anything else other than your customer, you will not have a business. So therefore, what pain points are they? What do they need? Do they actually need to have a payment holiday? Do they need increased facilities? What else do they need? So what we were able to do very, very quickly was create some new technologies to actually survey all the customers. So suddenly, whereas before it was very much built on conversational emails, suddenly we developed some technology that allowed us very, very quickly to talk to all of our customers. So the ones who needed that help most of all, most quickly, it was given to them. Others would say, "No, we're fine, thanks. We're actually doing quite well, no issues." Some saying, "Actually, we need to speak to you because we got an increased amount of business coming through because of COVID." And that comes down to another possible thing that may be learned for some customers: is be careful you don't over specify in terms of what you're doing and who you're serving. So I'm also the chair and major investor into a company that provides turbines to reduce fuels into green fuels. There is no actual way of adapting that at all. That's what it does. So therefore, at the end, if you can't install it, you just can't do anything. You are just going to have to hunker down and just keep the cost as low as possible whilst that happens. We have another business which we own, which is in the contaminated foods sector across Europe and the UK and Ireland. Nobody's traveling anywhere, so therefore there are no contaminated fuels. You're just going to hunker down right now. So again, I said it's important to understand that. So we as a lender have to look at those types of businesses as well and say, okay, well, let's understand what their pain is, what solution is required for them, and how do we help them get out of the other side.
Last question, John, from me, and this is one that we're trying to ask all of our speakers. The lasting impact of COVID-19. What will the lasting impact be in years' time when we look back for fintech, for your sector of fintech? What will the lasting impact be?
We will forget. The reality is we always forget. I was invited to Barcelona in 2000, I think, with Ryan, one of your former colleagues, to the CLO, the collateralized loan obligations. I think, what the heck are they? But they come to us, I go down there and discover they're talking about packaging good and bad debt to sell with a good rating. I said, wasn't this, of course, all the trouble in 2008? Oh, yes, but we're going to do it differently right now. And unfortunately, we do have short memories. Is that once we get back into our comfort zones, we'll carry on doing things we did. I'm hoping there are good lessons to be learned from this. I'm hoping we realize that actually being nice to one another and respecting one another is a pretty good thing to go and do, irrespective of whether it's COVID or not. And I think there will be a change of working habits and styles because more people will not want to actually go to an office for a while. But if you've ever tried, working from home on a permanent basis, after a while you do go a little bit stir crazy. So therefore, perhaps there'll be a more adaptable position in terms of work styles. I got people saying, great, looking forward to having a beer with you or a wine with you. So that sort of part will come back as well. So we will certainly adapt and use more technologies that allow us a more flexible business life. But at the same time, we are social animals, and therefore having that sociability in what we do is still going to be a big part of how we do things going forward.
Lessons to learn if we're willing to learn them, I guess. John, thank you so much. Brilliant stuff. Great to have you.